Hi everyone, welcome to the podcast. If you're new to the channel, please consider subscribing because every week I talk to FMCG founders, investors, and operators to learn how they're building FMCG brands. And I share my learnings with the world so that any young person wanting to build a brand today has all the playbooks to do so efficiently. In this episode, I was joined by Kunle Campbell, who is the partner at Octillion Investments, a UK based investment firm that buys e commerce brands doing anywhere from $1 million to $10 million in revenue, and they look to 10x their growth and their revenue. In addition to this, Kunle has also been running a podcast on e commerce for the past 10 years, and he has authored another book on e commerce, which is available on Amazon, and I'll put the link down in the description below. I wanted to maximize my time with this veteran, so I focused the conversation in three distinct parts. The first one is about the metrics that Kunle considers while deciding which brands to buy. The second is about the red flags that he looks out for, which makes him say no to a deal. And lastly, we spoke about some trends that Kunle sees in the next 3 to 5 years for the e commerce industry in general. So please enjoy this episode, and the timestamps will be in the description below. And I'll see you for the next one.
Thank you, Ahmed. Yeah, I was actually having this conversation with somebody yesterday, and I was like, I need to simplify my LinkedIn, just for just to less is more, less is more. You're right. I have a podcast. I've been running the podcast for a decade now, and it's been focused on e-commerce called 2x e-commerce. I'm a partner at a company called, it's a holdco company, an e-commerce holdco company called Octillion. And yes, I've authored this book behind me, titled E-commerce Growth Strategy. But my journey, it's been an interesting one. I started out in digital marketing back in 2006, and I, when you're looking for your passion within your passion, and it was not until 2013 or 12 that I'd realized that I had a passion within my passion of digital marketing, because digital marketing is so broad, and it was e-commerce. So in 2013, when I started my podcast, I doubled down on e-commerce, and I have had a journey from agency owner to a fractional CMO for e-commerce, small businesses, funded, businesses. And then I wanted to be on the other side of the table, which is to actually operate, e-commerce businesses for the rest of my career, because careers don't last forever.
Yeah.
So that's how I go into Octillion, and what we do aligns with what happened to me like 12 years ago, which was I fell very, very ill. And when I look at it in hindsight, the reason I fell very ill was down to just my habits. I take 100% responsibility, and I didn't really care too much about my health, personally. And the habits caught up with me, my eating habits, my recreational habits, it all caught up with me, and it created inflammation in my body, and I had to sort of do the right thing. So when I thought, okay, what kind of e-commerce businesses should we get involved in? I was like, they have to be good for you. We're not going to sell people poison, even though that's the easiest thing to sell. So we're like, okay, it's going to be good for you, and any brand we acquire will have to be good for you. On the podcast, it's still pretty much e-commerce, but I have a newsletter linked to the podcast, which is very focused on wellness and conscious commerce. It's actually called conscious commerce, and that's kind of like the direction I'm headed, towards. And that's pretty much me, an intro.
So just digging deeper into your investment part of your career, right, with what you do in Octillion. So could you just explain your model a bit more? Is it that you're an aggregator where you buy brands when they're really small and you operate them and then hope to sell them on at a later stage, or what does the model look like there?
So we have a minimum 10x, 10x. It's more like a 10x growth strategy. So we buy businesses with revenues, profitable businesses with revenues of between 1 and 10 million dollars or pounds, and we look to exit, when we have scaled EBITDA from up to 10x essentially.
Hmm.
And obviously they have to be in food and beverage and skincare, and they're good for you. Now we're
Hmm.
boutique. We're not an aggregator. Very 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 clear.
Hmm.
We're not VC backed. I beg your pardon, and neither are we. We're privately sort of funded through equity and debt, and we look at deals on a deal by deal basis. I remember before we made our first acquisition, we'd gone through about 150 deals before we'd actually assessed the initial deal,
Hmm.
and we'd almost passed on it, right? And we just kept on plowing through, and then we reflected and we're like, okay, based on those values, I earlier sort of brought which of these actually meet our expectations. So that's it. We prefer to work in the UK and the United States. Should a deal come through, we're actually speaking to a beauty brand in the US right now. We don't know whether that will close or not, but we're open to both geos, and we're essentially operating these businesses to grow them. So really, typically our sweet spot when we started was 1 to 10 million, and
Hmm.
keep it profitable. So if you're doing net margins of 20%
Hmm.
at 1 million, that's about 200K. Actually, the business we acquired was doing 250 on their net. But at the 200, can you grow the 200 EBITDA to, or net margins to 2 million
Hmm.
in 5 years? It's very possible. You could do it
Hmm.
in fewer. And then can you sell it on? That's a more difficult proposition because for smaller PE firms, they're looking at EBITDA in the range of, having spoken to some of them, yeah, actually two to 5 million is their sweet spot. So we want to sell to smaller, like PE firms that would, then on sort of grow it to another level, and then they'll sell on to the bigger, to bigger PE firms. So that's kind of like where we're at this point in
Hmm.
time.
So when you're analyzing a particular deal or a particular brand, what are some of the metrics that tell you, okay, this is an acquisition that can easily be 10x in the next, let's say, 5 years, right? What are some of those things that you look for?
Good, very, very good question. First is just looking at what segment their TAM. So
Hmm.
just looking at the total addressable market, number one, and then seeing what uniqueness they actually offer the market. So within their TAM, what territory do they own? What makes them unique? Because you
Hmm.
want some sort of differentiation,
Hmm.
right? And then I also like to no, I'm talking about the intangibles here. I also like to
Yeah.
see a good founder story, or a good story, brand story, or the kind of like cues for us to extract. If a brand story isn't well told, how can we, is there anything to take from this journey thus far to extract a really good brand story? Because these are the intangible assets that we're going to use to scale the business, authentically. Then I would also look at their channel diversification. So are they concentrated in a particular channel, and why are they concentrated in a particular channel? Now, there's no good or
Hmm.
bad, because if they're concentrated in a particular channel, it means that there might be opportunities in other channels. Or are they blasted through like five channels, right?
Hmm.
Equally contributing maybe 20%, and in their channel mix, essentially they pretty much maxed out. It just means they need to produce more products. And we also look at their SKU count. The simpler the better.
Hmm.
and we don't want to acquire, a business with that's just doing, say, a few $1 million, and then we have to sort of be managing inventory of 100 SKUs. It doesn't make any sense. So the simpler the better. 25 SKUs is kind of like a good spot.
Hmm.
To be honest, we've come across brands with one is an extreme where, because you could then have one, and then you're like, huh, how am I going to scale the one? But you look at a company like Athletic Greens, they're one
Hmm.
SKU.
Hmm.
So we look at that, but it's the differentiation that's important. The differentiation in messaging, differentiation in channels.
Hmm.
When you look at the channels, for instance, what say we found an acquisition target or brand that's just been scaling through podcast, advertising, and they have a unique method. It means that we could sort of take some of what they're learning and take some of those learnings and use them in our
Hmm.
other portfolio brands. So that uniqueness and diversity is very important to us. As I said,
Hmm.
the time is important, and then we look at the financial metrics. We used to have a partner that would do due diligence with us, at the same
Hmm.
time. So anything from a financial standpoint, that is. And then we look at the raw numbers. How asset heavy or asset light is the business.
Hmm.
Can we handle all of the logistics? Because the more assets, the more assets are in the business, the more operationally demanding the business is. We
Hmm.
need to look at that. Is there warehousing, so 3PL and all of that stuff?
Hmm.
What's the team like? We look at the team structure.
Hmm.
Is it remote? Is it distributed? Is it light again? And then we look at the real true EBITDA, because you find some deals, many deals come to your table and they don't even include the owner's salary, and you're like, what doesn't really make any sense. We need to understand, what value this is given to the owners, from that
Hmm.
perspective. So there are many layers to it. But yeah, you just come through.
I see. So it's a bunch of tangible kind of metrics as well as a lot of intangibles. One of the key ones you mentioned being brand story, and we'll get to that in a minute. But maybe just to kind of also give the audience a bit more insight into your process, could you like give an example of one of your current portfolio brands, or maybe one that you've exited in the past, and what was the kind of opportunity that you saw with that particular brand and how you scaled that?
Okay, so with there's a brand we acquired, was it 18 months ago. It was in the beauty space, and we've exited it, by the way, a few months
Hmm.
ago. And their uniqueness, in our opinion, was down to their ability to their funnel, their influencer marketing funnel was just very interesting to learn. They had a very unique way of acquiring customers, um, and we rolled that in. What we did was, there was single product business,
Hmm.
so we rolled out essentially more SKUs into it,
Hmm.
and used the same system to sell the other SKUs.
So, what was their influencer marketing that you're talking about that kind of set them apart?
So they had a quite a without giving too much, they had quite a unique way of collaborating with macro and micro influencers in a cash flow positive manner that ensured that there was ROAS in almost every deal they made. So they were able to assess the potential of an influencer if they collaborated with an influencer on a performance basis, right?
Hmm. Hmm.
They were able to calculate with reasonable accuracy as to what the yields are. So let's say an influencer, let's say they approached an influencer, and the influencer provided them with it with her stats, right? With the data they get from the influencer, which is verifiable, they were able to predict how much revenue will potentially be generated from that collaboration. And
Hmm.
as a result, they were able to price the collaboration to a point in which the contribution margin made sense.
Hmm. Okay.
So that system in of itself was quite unique.
Hmm.
And it worked. It worked. Obviously, there's economies of scale. You can't continue working with the same influence and expecting the same result over and over again.
Yeah.
So there are challenges in the sense that if like you're working with influencers in a specific space, you could exhaust that space. So let's say
Hmm.
you're working with influencers in the beauty space and makeup, makeup space. There are only so
Hmm.
many influencers in the makeup space. And so if you're doing the same product over and over again, then there's a concentration risk, right? So the
Hmm.
idea is to switch up the products and then, sort of reinforce the brand, and people should know that, okay.
The other thing that you mentioned when you were talking about the intangibles is a lot on brand story, right? And I see a lot today that the new CPG, new e-commerce brands that are coming, they have usually have a very strong founder story attached to it. Why do you think that's so important for scale today?
Do you read books?
Yes, I do.
Do you read like non-fiction books?
Yes, I primarily read nonfiction.
Okay. Just randomly, what's been your most memorable one so far?
Shoe Dog by Phil Knight.
Okay. That's essentially, you learnt a lot, didn't you?
Yeah,
You
yeah,
learnt a lot, but that's essentially a
yeah,
story, isn't it?
yeah. It is. It is.
It's a series of stories. It's a
Hmm.
series of stories, and we remember stories more
Hmm.
than facts.
Hmm.
So intrinsically, we hang on to stories first, and then we rationalize with the facts. Stories is emotions. Stories speak to a deeper part of our brain than just the facts. The neocortex is facts, is logic. The
Hmm.
amygdala, if I pronounce it properly, is emotions, is feelings. So stories evoke feelings. Then you can throw in the facts.
Yep.
So with when you look at like TikTok brands now, modern TikTok brands or Instagram brands that have longevity, because you could still sell on logic. I mean, I could just demo something to you and sell on logic and then you buy, but are you going to come back again and are you going to remember me? That's a problem.
Hmm.
But the story, you will remember the brand. The brand then sits as a person, as a as an entity, as an organism in the person's brain with a story.
Hmm.
So with a strong brand story, you can build a tribe. And if you can build a tribe, you can build a business. You just need 1,000 true fans, right?
Hmm.
So yeah, we look at the story. What is the story? Are these guys just selling stuff? Just selling stuff? Yeah, the cash flow is good. Financially, it makes sense. The businesses that have done really well just selling stuff, but the story is scalable from a social media and a modern media perspective. We're able to churn out more ads that sort of will be effective longer term. And yeah, I think that and we're able to sell to influencers, sell the story to influencers,
Hmm.
even better, have them more committed, and get people to not just view the interaction with us as transactional.
Yep.
If they view it more than transactional, where they're supporting something bigger than them, they'll stay longer, they stick longer.
Hmm. That's such a good way of putting it, actually. And now that I think about it, like some of the brands that I consume when it comes to food, like healthy food brands, for example, usually they're quite a lot more expensive than, let's say, the run of the mill, mass brands. But I still go and buy with them because, as you said, right, it doesn't feel like a transaction. It feels like an investment in myself. I know the story, I know what I'm getting, and it feels like I'm part of a community. So yeah, what you say makes total sense.
And then you can also, when longer term, you can sell it for more, the
What
brand.
do you mean?
So it's an intangible asset. it then gets into the brand equity. A
Mm.
brand with a story will have a huge community. Not necessarily a huge, an engaged community. And if you can attach value to the engaged community, to whoever you're selling it on to, they'll apply that same value as against just a brand that's just selling stuff.
Correct. That's the term of goodwill we see in accounting sometimes. Kind of that's
Mm,
that intangible being captured there, the premium that you pay for the brand.
mm.
Yeah, that's so true. Okay. No, thanks a lot for that. On this note, right, I just want to flip the coin a bit. So you've told us about brands that what you look at when you acquire, brand story being very important, certain financial metric, return to the owners being very important, and them having something different about themselves being very important. Have you ever come across deals where you see certain things in a brand and that's an immediate no for you, if from the point of view of acquisition?
Yeah, reviews.
Reviews.
Yeah, so if a brand, the reputation of a brand, so if a brand, if you, one of the things, people do late, acquirers do late, is just
Mm.
search the brand name and then reviews, on Google, and go to their Trust Pilot, go to their whatever reviews platform that they have, because like, you know, um, on-site reviews, they can be sort of engineered, they could easily be cooked. But
Mm.
the offline one, when like I'm furious about my experience, I didn't get my refund, um it just took forever. I'm going to go to Reddit. I'm going to complain, as
Yeah.
a modern consumer. And
Yeah.
I'm going to try and just look for the Google reviews and say my mind, or go to the Amazon and just express myself. And so that's what we do, as in like, so if I start to see that, I could ask the seller, a question and say, why did this happen? And maybe if they have a reasonable explanation that, okay, this was, if you notice, it was just a certain timeline. This happened in July or to November of 2022 because X and X happened. And, there's, yeah, that's believable. And if you then see the reviews after that period seems to be okay, then okay, they accepted their issue. There
Mm.
was reputational damage at the time, but it was, it's been clawed back. But if it's consistent, then it's a no-no. Another no-no is, at least for us at this point in time, who knows, as we grow, we don't buy companies that are in loss, so loss-making companies at this point in time. We have to buy cash flowing businesses. That's at the financial, level. Um, while all other things, based on all the other things we want to see, they're the ones that attract us, size of their email list, their audience, engagement of their audience, conversion rates and all of that stuff. And then is it non-differentiated? I think that's another number 3 point. When I say
Mm.
non-differentiated, I mean if you then if their products essentially, you go to Alibaba, you see the exact same thing,
Yeah.
and then you go to Amazon, and then you're seeing sellers there. It's like this is just it's commoditized, right?
Yeah.
Yes, you were lucky to get into the space in good time and you made a killing, but like you've ridden the highest wave in this product. Maybe it's a
Right.
brand, who knows, but there's no longevity there. We don't see,
Correct.
because it's been copied and
Correct.
commoditized.
Then at that point, it's not a brand. It's like you're just doing drop shipping at that point where you're riding the wave,
That's
and then
correct.
yeah, yeah, yeah.
And,
So
and
it's not.
if it's a brand, then the brand owner would start to say, okay, we're in a bit of a red ocean right now. How can we redefine ourselves to get into a blue ocean? And they'll be innovating at the product level to keep ahead. Now, some acquirers could do that, could step in and say, let's take that risk and take it to the next level. Oh, it's risky. It's very risky. So if the owner has done it, then that's a big, big plus in my eyes that okay, these guys know what they're doing. They're product people, they've managed to, they've also, gotten product market fit and just shows that there's profitability here. But if it's just commoditized, then we're not doing it. The other thing we used to see a lot in particularly in these marketplaces, business for sale marketplaces, is when you see maybe a traffic and a sale sort of peak, and then you just see it drop again, and then they're selling on the drop. It's just pure pump and dump, right? So you just ignore that. But this is why these stories are important. The brand story is important. It's very important to do. Yeah, I think those are the major points.
Yeah, all those points make complete sense, and yeah, I think that's quite good learning for someone who's A, building a brand, and B, also if someone on the acquiring side is listening to this, I think that's some of the flags that they can look out for. So I think you're the perfect person to ask this when I want to check on what are some of the trends that you see in the next, let's say, 3 to 5 years span. What kind of brands do you see doing well in e-commerce?
So I think science backed is going to be a prerequisite, as in like just demonstrating that there's science behind what you're offering in the wellness space, whether it's skincare, whether it's food and beverage. You have to be backed by science, and science is not enough. You then need to sort of differentiate within the science. Like somebody put together a post yesterday, and it was showcasing some vitamin D product, right? Vitamin D is so rampant now. Everybody says you must get vitamin D. So, because
Yeah.
there's so much advice on that, there's so many brands that offer vitamin D. But this particular brand was like, all our vitamin D is from natural, like real food sources. So um, this is not chemically induced, and that
Mm,
was their point of differentiation within the science. So differentiation is always going to be key with science and with science, basically with science tech,
mm,
in that sense. In our space, I would have liked to say personalization is another trend. Well, the challenge with personalization is that it's very capital intensive, you know.
yep.
So I think social media podcasting, we're in it now, but there is a lot of leeway in terms of of social first brands that might not even have websites, you know.
Mm,
So I think social commerce, TikTok is pushing that. Instagram is going to catch up, or else, they might go down the way of Facebook. So yeah, all of that will be coming through. In terms of what else, founder led is where we are. We're in this era of founder led.
mm,
Lots of people are doing founder led, and yeah, so I think it's going to continue. Brands without a face will suffer essentially.
mm,
And personal branding paired up with your brand will be still very, very, very important. Yeah, so if you think about Gen Z, the Gen Z group, that's how they think. They think in they consume media in a different way, and they're going to be the major buying group now, moving
mm,
forward. So if you look at their buying habits and how they sort of congregate, like for instance, they don't consume as much alcohol as other generations. So looking at those trends,
Yeah.
will be very important.
It's interesting you mentioned that aspect about the founder-led, content-led social brands, right? I just made a post about this today itself. In fact, I was listening to a podcast by Gary Tan, the CEO of Y Combinator, right? And in that, he mentioned basically, right, every founder today needs to create content because you got to get eyeballs somehow, and all the distribution today, particularly for consumer brands, lies on social media. So you got to either create like really creative, engaging, organic content, or you got to participate in the ad networks for these businesses because it's just distribution that you need. So it's really interesting that you mentioned, and I completely second that as well. And that's with that I have come to the end of my questions. But thank you so much for kind of taking us through all those important metrics, important pieces of information for anyone who's looking to acquire a brand or anyone who's building a brand that wants to sell it or flip it later on.
Cheers, cheers, cheers.
Yeah.
You ask amazing questions, and yeah, I thoroughly enjoyed this conversation.
Thank you so much. And coming from someone who's as experienced in doing this, it's that really means a lot.
Oh no, amazing, amazing, amazing. Thank you so much for having me.